Hey guys, this is a market update. Obviously, Bitcoin, stocks, and even bonds down this week, all being sold off. And then this just continues the route that we've seen since the start of this year. So I want to look at the short, medium, and long term for Bitcoin. 3 charts that really show where we might be going. Obviously, timestamps in the description as always. I want to start with Bitcoin versus the NASDAQ. You can see since the start of the year, these two are basically 1-for-1 correlated, both down within a percentage point of each other since January. So in the past, there have been times when Bitcoin has become very uncorrelated. During times like this, though, when the Fed is basically manipulating things, when they were printing money, and now when they're actually starting QT, quantitative tightening, taking money out of the system, everything's correlated, right? So everything's selling off. Bonds, stocks, NASDAQ, even the Dow Jones and Bitcoin. Fears of a recession. Is this peak fear? Probably we've got a way to go, especially if economic figures start coming down. Everyone's going to be competing to how bearish they can be. But I want to look at the medium and long term because this really shows a massively different picture. So it depends who you are as a trader. If you're a short-term trader, you just have to have a bias towards basically selling rallies, going short on rallies, because we are not in a market that can really go up over the kind of short to medium term. Now, the very big danger of this, and I'll get onto this now, is really over the medium term, bear market rallies. Bear market rallies do happen. You may have actually seen one right in here from this level at 37, really straight up to 47. Now that coincided with the Lunar Foundation basically market buying Bitcoin. So a little bit of a kind of manipulation there, or, something in the market that was affecting that. But those can happen in bear markets. So when you want to short, really what you want to be doing is after the rally happens, and there are bear market rallies, but obviously once we're still in this regime of the Fed tightening, you really do have to, short the rallies and not buy the dips, if that makes sense. In, the previous years when the Fed was printing, you would just wait for dips and buy for the next leg up. But this is very different. You will probably have a better probability of winning trades if you go short on those rallies. But obviously, you might not want to trade short, especially if you are a beginner. If you are a trader and you trade futures anyway, check out Bybit, which I'm using here. They'll give you a $4,000 or up to $4,000 deposit bonus. If you deposit some crypto or fiat currency on the platform, they'll put up to $4,000 in your futures trading account that you can trade as a deposit bonus. If you want to go ahead and do that, I'll leave the link in the description. What I want to come to, though, is a head and shoulders pattern that I can see for Bitcoin, which is usually a bearish pattern, especially if you're at the end of a cycle, and we are, because the Fed is now tightening, which is definitely a change in cycle. How much is this going to affect the kind of medium-term future of Bitcoin, though? So what I'm talking about here is you can really see what I would say is a head and shoulders, right? So we have a shoulder, we have the head, and then a potential shoulder here, but that could actually come down to this point as well, and we could have just played out this shoulder right here. I don't think this is the case. I think we actually entered a new paradigm around this level, and we're now in kind of uncharted territory. So usually a head and shoulders is kind of bearish. And so we've already got the kind of sell-off right here. So I do think we're in a new paradigm. But obviously what we're seeing right here is, a support level that really does have to hold around 34,500. And that is obviously a very, very big support level. Under that, it really is clear sky down to probably 30,000. Now, I actually heard the head of Nexo come out and say that they've got a very large amount of institutional orders around 30,000 around this level. So if the price does get down there, he's expecting quite a lot of activity to take place and probably a floor around that level. So just some good insights from a very big player in the industry, that they have a lot of buyers to come in at 30. But I think there are a lot of other buyers around that level as well. And if you have a ton of buyers at 30, it probably means that you're going to see it trade around above that, maybe 10 or 15% above that, trying to get them to pay up. So that'll be an interesting move over the next few weeks to see, if we can hold this 35 level, maybe have a little of a relief rally here. But he seems to think that we're getting close to kind of a bottom, especially with a lot of institutional players around the 30 level. If you're a long-term trader or investor, though, this is really just an opportunity to dollar cost average and get in, some better prices than, what we were seeing at 60,000, which was just way too much money sloshing around. And I want to highlight this post by Ada Whale. Now, apparently this guy is actually a TradFi guy and fixed income. So, these guys look at all of these emerging market currencies and rates all the time. But interesting to see this very long-term trend that you can see here. And what it is essentially is a line of the dollar versus emerging market currencies and a line of Bitcoin versus the dollar. Now you can see they're fairly correlated here, but I think it shows a picture really clearly that essentially the dollar just strengthens continually against emerging market currencies. And that makes a lot of sense. The vast majority of EM currencies are really just very poor. They have extremely high inflation, way more than the dollar. And they're just, much worse economies overall than the dollar and, US treasuries and the American economy, right? And so they just continually debase themselves versus the dollar. But what's also interesting is that when the dollar itself, which is the best fiat currency, the best of a bad bunch, when that itself comes up against what is very clearly the hardest money ever, created in Bitcoin, that also devalues at the same pace. So really, when anyone wants fiat currency, they want dollar versus Argentine peso or anything else, right? You don't want to hold those. You want to hold the dollar versus those. But over the long term, you also want to hold Bitcoin versus the dollar because it also appreciates to, around the same extent. That's why I think Bitcoin over the long term really is more of a savings account for the world. And I think it unlocks a lot of potential growth in emerging markets. And emerging markets have always been seen as a very, good place to invest because they have growth. But in reality, they've been terrible to invest in because you have to take your dollars and put them into a rubbish, trash currency that inflates away. No one wants to do that. But now we have Bitcoin and people in those countries can save their own wealth that they create and people can invest in those countries with Bitcoin, which is a strong asset also. And so this may unlock the growth from those markets that we actually need rather than just debasing all of that growth all of the time. This is the unlock for me. And this is the way over the long term that we actually get out of this deflation that's happening in the West. That's for a whole nother video, but Bitcoin is the unlock of that. I also want to come to this as well, which I posted in the private Discord groups that are part of the crypto course. I'll leave my crypto course in the description if you want to see that. But this is Ethereum against Bitcoin. And so this is really bullish. If you just looked at this chart and people in the group were saying, wow, this is quite a bullish chart, what is this? But if we can come and actually see, just ignore that, we can actually see, these higher lows coming here. So this is Bitcoin against, this is Ethereum against Bitcoin. And what we're really seeing here is a lot of interest in Ethereum. It's becoming more valuable against Bitcoin. And I think as the merge comes, you're just going to see a huge amount of interest in Ethereum. Now, they're very different assets, but Ethereum really is extremely strong in terms of its price in relation to Bitcoin, which is why I hold both, because I think Ethereum has a ton of value and clearly is appreciating in value quite heavily, and the merge is going to absolutely supercharge that. But anyway, if you do want to get up to $4,000 as a deposit bonus, check out that Bybit link in the description. Other than that, come and join the public Discord server. I'll pin that as a comment as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.